U.S. trade policy is a major source of uncertainty. There are many possible scenarios. There's a lot we don't know. We don't know what new tariffs will be imposed, when, or how long they will last. We don't know the scope of retaliatory measures or what fiscal supports will be provided. And even when we know more about what is going to happen, I do need to be clear, it's still going to be difficult to be precise about the economic impacts because we have little historical experience with tariff changes of the magnitude that the U.S. is contemplating. Nevertheless, some things are clear. A long-lasting and broad-based trade conflict would badly hurt economic activity in Canada. At the same time, the higher cost of imported goods will put direct upward pressure on inflation. The magnitude and timing of the impacts on output and inflation will depend importantly on how businesses and households in the United States and Canada adjust to higher import prices. Unfortunately, tariffs mean economies simply work less efficiently. We produce and earn less without tariffs. Monetary policy cannot offset this. What we can do is help the economy adjust. With inflation back around the 2% target, we are better positioned to be a source of economic stability. However, with a single instrument, our policy interest rate, we can't lean against weaker output and higher inflation at the same time. As we consider our monetary policy response, we will need to carefully assess the downward pressure on inflation from weakness in the economy and weigh that against the upward pressure on inflation from higher input prices and supply chain disruptions. So let me tell you what we're doing in preparation. In recent years, we have invested in better information on supply chains, trade links, and the connections between sectors. And this is helping us analyze the effects of supply disruptions, including tariffs. We've begun assessing the possible consequences of different tariff scenarios, and we present an example in the Monetary Policy Report. We are stepping up our outreach activities across the country to hear directly from those affected by trade uncertainty. This includes augmenting our surveys of business and consumers to better understand how trade uncertainty is affecting their decisions and how they would cope in the event of a trade conflict. We will update you on our analysis and assessments as developments unfold. Having restored low inflation and reduced interest rates substantially, monetary policy is better positioned to help the economy adjust to new developments.